Check. Is this thing on? Yes. Good morning, everybody. Welcome to the morning show here on Stock Market TV. Spencer Israel, Steve Strazza, JC Paret, Alfonso de Pablos. Hope you all had a great weekend. We are back in action today. What's on the docket? Let's look at the doc. What do we have? We have Todd Gordon on the show today. We have Kenny Glick, as always. We'll have Jason Paret on the show. And let's see what I have no idea what the guys want to talk about. No clue. It could be meme coins, it could be bonds, it could be anything. Anything is possible on the morning show. What up, chat? How we doing? Let's get this show on the road here. Hit that like button for me, please, and thank you. Subscribe if you haven't already. I would appreciate that. And here we go.
All right. We are back. Happy Monday, everybody. I was thinking this morning, what did we used to do before the morning show?
You know,
we used to do this, but without recording it.
We would do this, but on phones,
telephones.
You know, it's been a while, guys, since I've been in my office. JC's been in his office. Spencer's been we're all back and together in our places. This is nice. This is really nice.
For now.
Yeah, for now. I got a road trip later this week.
Yeah, me too.
I'm gonna enjoy today then.
No, it is nice really to be together with you fellas. You know, until I tell you guys how dumb something you just said is, which I'm sure we will in the next hour. But for now, that it's nice and peaceful, I really do appreciate you guys. You too, Strazza. I like your light. Nice, good light.
New light.
Yeah, Chicago Bulls. I was watching Phil Jackson hating on Jordan the other day, talking about how Scottie Pippen was so great and hating on MJ.
Haters gonna hate. What can you do?
Man.
It's okay.
Man, Phil. But it was back in the day. It was while Michael was playing baseball.
They all had their stuff, you know. They all had their situationships going on.
Yeah. I got my own, you know. Don't we all?
Yeah.
So it's a bull market. Maybe. We should want to talk about it?
We probably should.
Let's do it. All right, ladies and gentlemen, we've got the Dow futures this morning doing nothing, down about 30 handles, so flat this morning for the Dow. S&P's on the other hand, down over 0.5%, 58.30 for the S&P 500 futures. NASDAQ 100 leading the way off the lows of the day, but still down almost a full percent, 20,820, down 200 points this morning for the NASDAQ 100 future. Bonds bouncing a little bit. Still under 112 for 30-year bond futures, but bouncing a little bit this morning. Oil up again, $78 for crude oil, up almost another 2% this morning. Copper flat at 430. A big bounce last week. That definitely stood out. I want to talk about that. Gold down 1%, 26.85. Silver down 3%, $30.30. With the volatility index above 21 this morning for the VIX over in funny money land. Bitcoin off the lows this morning, but still down 3,000 points. That's over 3%. 91,400 for Bitcoin. Ethereum Ethereum 3,070, down 6% on the day. Solana almost 6% on the day to the downside as well. Back under 180. Binance 670, down 3% with the total crypto market cap. Spencer Israel down towards the lowest levels we've seen in months. 3.1 trillion for total crypto market cap. How do we feel about this morning's futures?
I don't love it. Don't really love any of this, you know.
Tell me more.
Risk asset markets back in corrective mode. They've been that way for, I don't know, going on
a month
now. Yep.
Go to slide 5, Spencer, if you will. So this one, this is the headwind for the markets. Curious if you agree on that. U.S. dollar index hitting new multi-year highs. Last week continued strong, remained strong this morning.
Yeah, that's bad. Right?
How bad is it when you think about how well stocks and other risk assets held in throughout the fourth quarter with the dollar rallying, right? Is it one of those things where that was fine, but this is getting to be too much for the market to handle?
We always say that, right? Maybe the bigger takeaway is, hey, look at how resilient risk assets have been in the face of a rising dollar. We always say that. Now
Yeah.
it's time to see if it's true or not. I think this warrants a more cautious stance, period.
Yeah.
We
If,
talked
if the dollar's above 107, 108, it's a headwind. Facts. Right?
Yeah, for 2 years now, we looked at that range and said, if we're up there where we are now today, it's no bueno, right? So I can't, now that it's actually happening, stand here and explain it away, right? I don't know how bad it is. We always talk about that, but
well, if it heads up, I'll tell you what. If it heads up to those former highs near 115, that's a big problem.
Yeah,
right. 115 is at the level.
What does the market of stocks look like?
Close to 115.
Cryptos are probably getting obliterated in that environment. It's probably no.
But wouldn't any of you have said the same if I told you what the dollar did in the fourth quarter? Wouldn't any of you have said the same then?
You have like bond market people come out and be like, "Oh, but it's because of interest rates and inflation, and the economy is really good." That's all fine, but rising dollars are still never a good thing.
Go to the slide 7 there, where you could see the dollar and the U.S. 10-year yield really moving in sync. Could these things start to move differently? Sure, but they haven't, right? They're still moving together, right? Dollar and 10-year.
That's the moving together. Don't tell me otherwise. That's it.
That's it. It could change, but there's no evidence at all that it has or that it will, right?
That's right.
Again, they can and likely will change one day. That day has yet to come. Quite the opposite. They continue to dance together. All right. I want to take a look at a couple of look at slide 4 and 5. These are
I want to ask, is it worth it to like have key levels for the major indexes, or should we just look at that chart?
Well, if you want to throw up slide 2, we can look at the S&P 500. These are the key levels for me. And I'll throw even in the Dow there as well. But these are the key levels for me for the S&P 500. They have been. You could say what you want about anything, intermarket relationships, market internal, sector rotation, all of those things. Higher highs and higher lows remains the case in the S&P 500. That 560 level and the SPYs, that has been the level, that remains the level. If you want to look at the Dow and the NASDAQ actually look more similar. They're both, in my opinion, more vulnerable because they are closer to those key levels. Look at the Dow already retesting that key extension level. So is the NASDAQ 100, by the way, while the S&P has not. So my suspicion is you are likely to see the Dow and the NASDAQ break before the S&P 500 if they are in fact going to break. And you are also likely to see an expansion in stocks making new lows, which we have yet to see. Have not seen an expansion in new 1-month lows, 3-month lows. Obviously, the new 52-week lows list is non-existent. Haven't seen that at all. My suspicion is if you are going to see a break in the S&P, you're going to see a break in the Dow and the NASDAQ first, and you're going to see an expansion in the new lows list, and then the S&P will break. It'll go in that order most likely if that's what's going to happen. Haven't seen it yet, but that's how I see things. Would you you agree with all of that, Strazza? Or think that that's not right?
No, I do agree with that. I think just from a price action standpoint at the index level, I think Friday there was a good deal of tactical damage. You had these tops that formed in early December. Then you had downside throughout the month of December into year end. And then you had these little coils over the past few weeks. IWM looks this way. Dow Jones looks this way. Anything looks this way. XLI looks this way. XLF looks this way, right? So you had these little coils. And then Friday was a big resolution day for those coils. Now we're going to look back and call those bear flags or bear pennants, right? So now the question is, do we get more downside follow through, right? On these bearish pattern resolutions, do we get a couple candles lower now to start this new week? Where does that bring us? How many key levels get broken in that process? So that's kind of where my head is at.
I think if you do get these breaks, the Dow and the Nasdaq break first, and the expansion and the stocks making new lows expands. I think it all happens before the S&P 500 breaks down, based on the weight of the evidence. Now, to be sure, we have not seen any expansion whatsoever into the new lows list, and the reason is because of sector rotation. And a lot of times, people are looking at sector rotation in terms of which stocks are making new highs, which stocks are leading, which stocks are pushing up against new highs. In a lot of cases, I like to look at the opposite. Which ones are not making new lows? And the reason that the new lows list has yet to expand is because anytime that these sectors are most vulnerable to break down, a bid comes in and they buy them up. That's why the new lows list never expands, because the ones closest to new lows get bought up, right? They have this entire bull market. It doesn't mean that it has to happen now again, but it's happened every other time. Yeah. So I got a couple of charts. I want to hear your thoughts on this. First of all, slide 6 here. We're looking at the high beta versus low volatility index, making new. I think we got about more than 60 basis points of alpha last week, actually. Notice all the tech and consumer discretionary in high beta. You would think high beta would be rolling over relative to low volatility if things if shit was about to hit the fan. And I got 2 more charts, and I want to hear your thoughts, Strazza. The next one is consumer discretionary relative to consumer staples on an equally weighted basis, making new all-time highs again last week. So again, historically, when stocks are under pressure, markets are in a correction. Obviously, you get an expansion in stocks making new lows. We haven't seen that. You also see rotation into consumer staples and the defensive areas. You haven't seen that. Those are actually some of the weakest areas. And then the last one is just staples relative to S&Ps, making new all-time lows last week. That's that next chart there. New all-time lows last week. Consumer staples relative to the S&P 500, taking out the lows from the March 2000 peak.
The bulls are scoring points on these risk appetite checklists of ours, right? Yeah. So this is a couple points scored for the bulls here. Staples breaking down to new lows, discretionary staples breaking out to new highs. Love to see that. It is risk on, but it does not change the fact that on an absolute basis, a lot of these groups that you're looking at are suffering some tactical damage for now.
I want to throw up a few bellwethers.
Discretionary is no different, JC.
What's that?
Discretionary closed. If you look at equal weight discretionary, RSPD, it's that same pattern I'm talking about. Closed below its election day high. So now discretionary, the best sector in the stock market over the trailing 3 and 6 months, these are the best stocks, have given back all of their gains since the election.
And those are also the 2021 highs, by the way.
Yeah, but you could sit here and show me a ratio chart of them outperforming and hitting new highs on a relative basis. That's fantastic. We want that offensive relationship in place, right? For sure, if we're bullish. However, it doesn't change the fact that discretionary stocks on an absolute basis are getting hit all the same as everything else.
I want to take a look at a few of these because a lot of that particular ratio is being dragged down by the weakness in staples, not so much the strength in discretionary. Although we have seen some strength in discretionary in the fourth quarter, it was a leader. As of late, it hasn't been that strong. Why don't you throw up a few of these? Procter & Gamble, Coca-Cola.
You're right, Jason. The ratio broke out on weakness.
Yeah.
In the numerator. That's a little strange. It's not what you really want to see.
Weakness in the last couple of weeks, but more strength than anywhere else in the fourth quarter. This is what I'm looking at. So in a lot of these cases, you had breakouts above the prior cycle's highs. We've been watching that sector by sector, stock by stock since 22 and 23, right? So look at a few of these. Coca-Cola, failed breakout. Keep going. Procter & Gamble, failed breakout. Keep going. Sherwin-Williams, the latest addition to the Dow Jones Industrial Average, failed breakout. McDonald's, failed breakout. And then I would look to Salesforce. I didn't include this chart, but Salesforce it's still holding above the prior cycle's highs, but if it's going to spill into other areas, and these are market bellwethers, these are all Dow components. I was looking through all of them yesterday. You're going to see breakdowns in Salesforce as well. And there's a few other names that are very vulnerable that look exactly like this. Some of them, like Home Depot, haven't quite broken out yet. But these sort of failed breakouts you tend to see at market tops. And you're seeing a few of those. Not a ton, but they're out there.
Are you saying that the failed breakout theme is basically is only being experienced by staple stocks, or there's other stuff like Home Depot and Salesforce that.
Well, Home Depot never broke out. Salesforce has not failed its breakout. It's still holding there. But McDonald's is consumer discretionary.
Yeah.
It failed.
Okay.
Sherwin-Williams is in materials because it's a chemical stock. It failed. And there are others out there as well.
I mean, CRM, man, right there.
It's right there. It's right there. I got one more bearish one for you. So this one's making the rounds. This is the, look at slide 5. Here we're looking at a weekly chart. And around here, we give more weight to weekly divergences than we do to daily divergences. And here you can see the bearish momentum divergence in the S&P 500, very similar to what we saw in 21, not confirming the new highs that we're seeing in price.
Yeah.
So again, if you want to go back to the one with the Fibonacci extensions for the S&P 500, these are the key levels, but understand what's happening behind the scenes, potentially momentum rolling over. Granted, momentum's been rolling over since Q2 of last year, and the S&P 500 has continued to go higher, but nevertheless, something that's worth monitoring for sure.
I think we're in the kind of market where we are very vulnerable to some continued downside from current levels, and you need to do what JC's doing here. Set your line in the sand, use a broad average or major index to do that, and say, if we're below this level, I want whatever. For me, that's usually less exposure, less new trades, right? Not buying breakout, right? Like, set your rules. If we're below here, I'm going to act this way. We're in that kind of market right now. Did you hear my rant, JC? Oh, what was it? Friday on selling cryptos. Are you with me? Are you not with me? Are you golden handing this, or?
I don't have a lot of crypto exposure with Bitcoin below 100, right? So for me, I'm waiting for them to stick the landing. I'm waiting for a Solana breakout. Like I'm waiting for these resolutions is what I'm doing. Patience. As Louis continues to pound the table, patience in this market. I agree wholeheartedly. 100's a big level. I'd feel a lot more comfortable being long if we're above that. Again, like Solana, like those prior highs, I don't want to be long if we're not above the prior highs. Like, they're messy. Over the last couple of weeks, not just in crypto, but in a lot of things, we talk about these ranges. Go bellwether by bellwether through the Dow Jones Industrial Average stocks, through the Dow Transportation stocks. Go sector by sector in the sector indexes. A lot of messy ranges. Go look at the biggest cryptos, the bellwethers there, the blue chips, if you will. Range-bound markets. So, I mean, what do you do in a range-bound market? You could trade those markets, right? Trade the range, right? Which we've talked about and we're doing some of. But you can be patient and wait for the resolution, right? Which we're doing as well. Like, that's how I think about it.
So can I tell you what I've done here?
Talk to me.
Go to the Solana chart. So it's been range bound. I did a little bit of in and out this summer, back off of the lower bounds. But for the most part, Solana, and we've talked a lot about this over the past 2 years, Solana's been my biggest position, whether it's cryptos or equities, this whole bull cycle. It's been huge. We got in early. We got a ton of gains on the table that we have not rung the register on. And I saw this fail and fall back into the box, right, following the election. And I gave it a chance to scoop and score, which it tried to. And it advanced right to its VWAP from the all-time highs after bouncing off the key VWAP, the August 5th VWAP, right? The Yen Yo-Yo Day VWAP. We bounce off it, we dig in, we run back, and we test the VWAP from the all-time highs. We get stuffed. Tested a couple days there, a couple days. Dude, I'm basically out. I own a couple $1,000 of Solana, same size as everything else. I'm done. I can get back in. If we get back above VWAP, let's go. I'm here for it. I'm ready. The cash is there, waiting. But for now, I'm basically out of Solana. Nice trade. You know what my best trades have been this bull cycle? It's been Coinbase. It's been Palantir. It's been Solana. And, I can say that now. Do you know why?
Well, when you say this bull cycle, you're talking about in the last year.
In the last 2 years, since the 2022 lows.
But there were other names that you did very well with in the beginning of 23 that were not those.
I'm talking about trading the primary trends. We got in on Coinbase. We got in on Solana. We got in on Palantir. We were there early. And you know what that does? It gives you a superpower. When everybody else is talking about these names and trying to pile in, you're up 4, 5, 6x.
And
a
then can you
great
talk about
tremendous start.
I got one more chart that I want to close
Done.
out with, but can you talk about
Now,
the power of having P&L and being able to press when you've got it?
yeah, dude. I mean, it's great. Spencer was saying the other day it makes it harder to sell. Not for me. I'm sitting there. It's harder to hold when I'm sitting on all those gains. It's harder for me to hold. I'm happy to get out. And this is America. I say this all the time. You can get out, and then you could change your mind 3, 4, 5 days later. We got the long-term capital gains on all of this stuff that I'm talking about, right? So like we're good. We can re-enter. That's no problem. But for now, I like being flat. I really like the idea of being flat in crypto. These structures really worry me. They do.
Yeah, if we're below those over, if
Candles
we're
nasty.
below the former highs, I don't think there's anything to do here.
I don't
Can
think,
we
and
just? I
JC
wanna,
JC, even more, you're getting confirmation. So we're below the former highs in something like Solana, but we're breaking this August 5th VWAP today that's been holding for months now. That's the last line for me. If you're holding this here, breaking this VWAP today in Solana, and you're sitting on gains, go for a walk and think about it. Think about what is your plan if you're holding this with this red candle here today.
you know how we always say when you think the world's coming to an end, go for a walk.
Yes, dude,
Whenever you
walks
think-
are great.
The latest one is whenever you think the United States is becoming an oligarchy, go for a walk. That's the latest one. Okay, one more. I want to before we bring in Kenny, I do want to go over the dollar index one more time. Throw up that slide 9. The dollar index currently, I don't want to get too cute here because the market's not even open yet. But the dollar index rallied last night and is back below the Friday highs. So if you're looking for me, the dollar's the most important thing in the world right now. I think if the stock market is not going to break down here, I think it's going to be due or in part due to dollar weakness, right? I think any further dollar strength is likely to tip the scale over, and we could potentially start to see cracks in the market for the first time in a long, long, long time. Granted, every time we are in this position, if come in and bottom, right, scoop and score every single time, literally every time. So I think it's the dollar. So again, we're well off the highs in the dollar this morning, back below the Friday highs. That's a start. But if you're bullish equities, I think it starts here. I think this is really it. Anybody disagree?
No, we were saying this is the most important chart. I believe it. I still believe it.
I think so.
No pushback.
I have a couple questions about all the things you guys just said, but
Sure.
I'll save them for after Kenny because
All
I want to bring him on. Kenny loves this, so let's see.
It's been a long time coming. They ain't come from my club, they tug it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Wait,
Kenny,
Kenny, your camera's off.
what
There we go.
is it that Kenny loves? What's up, buddy?
What's going on,
He
y'all?
loves this. He loves waking up and seeing the market in the red. Do you not?
Yeah, we went short over the weekend.
I think
there was
fix your
signs.
mic. Fix your mic.
Wait,
Kenny.
you're on the
Can't hear
wrong
you.
mic. You're on the wrong mic. Yeah.
First timer, Kenny?
Maybe he rebooted over the weekend. This happens.
What happened?
I don't know. You're on the wrong mic setting here.
Jefferson.
Got nothing? All right, hang on a second.
So Kenny loves a big red market day. I mean, Dow is flat on the day. The Qs are the ones that are down about 95 basis points this morning.
Oh, okay. Then while he's back, I might as well just ask my question. Hold on, Kenny. Wait, Kenny, are you here?
Check. Nothing?
I mean, you sound okay. You just don't sound like you. You sound.
Hey,
like
you don't sound crisp like that beautiful voice of yours, you know?
Wow. Maybe because I'm finally going to reveal my bearishness. I don't know. You got anything? Nothing? I'll have to reload.
No, it's all right.
Oh, it's all good. I don't want to
Yeah,
hear
it's
about
all
your
right.
loads.
So, no.
Tell me what you
So-
think about the market this morning.
I came in short. Last night I was showing people about some NQ futures, and if you guys want to show the chart, I'll show you. If you guys trade the QQQ, this is what we trade. The futures is the NQ futures. So yesterday I was short over the weekend. Again, the signs were there finally with the quantum stocks finally blowing up, momentum running out of steam. So I woke up short, came in short, but most importantly, I actually did a long trade yesterday during dinner because we had a little faux show bro action. And for all you know, that's how bull markets begin again. Fake out, shake out, back above the VWAP. But look at the retrace. The retrace got back to the high print of 6 o'clock, and then they tested the VWAP and they came back. As I've explained, the faux show bro, there's an opposite side to that. That's the blow off top as well. So you got faux show bro and blow off top, and then it rolled over. And then when it broke the low of the day, got short and just used VWAP the whole night as an out, and basically woke up still short, just covered on this rally right here. So I'm very bearish. Again, I've been bearish for the last 5-6 days. I was waiting for the fad stocks to blow their top off. You saw the signs in Carvana, you saw the signs in Palantir, and here we are. We had this conversation 3 or 4 days ago. So, while the true trick of the bear is pretending you're bullish. Suckered you all in.
Well, I mean, as much of a perma bear as you might be, you have certainly been long quite a bit in recent months.
Oh yeah.
So let's be serious.
Oh yeah. But I've been looking for these signs, again, and the signs were everyone's talking quantum. Nobody knew these stocks. Suddenly everyone's an expert on rigatoni. They're even giving it nicknames. Rigatoni, quantum, the QS. And again, the joke was the day that we were talking about buying the stock because of the name. That's when you know you're at peak fadness. When you're scraping the bottom of the barrel, these stocks don't even have anything to do with quantum. Exactamundo, friendo. That's what we were looking for. And that was the moment where you got the blow off top. Now, again, this was all helped by Nvidia, talking about how these stocks aren't been good for 10 or 15 years, but who cares about that stuff? It's all momentum anyway. So on the way down, the fat stocks have blown the top off. I just want to show you the QQQ, and we're going to try to stay short today, but there's no reason to be short right this second. If we break back above those pre-market spike prices, then rally on. But I think now that we're in the Trump bump, again, if you go back to 3 weeks, go back, let's go back. Look at this. Here's your chart for you. Go back 3 months. This shows you the whole thing. So right now we're just in this gap. We're going into that gap from the election. So I think that's the 495 area. Hopefully we get there today if we do roll over. But if 495 on the Qs doesn't hold, we got another 10 points to the downside. Then we'll see what's up. So let the bears have their way. Like I said, let it bleed a couple of days ago. Let it bleed. Let it bleed. You don't have to be a hero catching a falling knife, because when they turn, everybody turns with it and they start ripping higher. And right now, hashtag liquid and loving it. I even sold my PayPal on Friday. I'm so disappointed in this market. By the way,
wow.
I'm no longer long to PayPal.
That's a long-term hold for you?
Yeah. You know what? Every time I bought more, the stock went down, and I did it again. So I gave it, I said, all right, I'm going to make a stand at 85. If it breaks 85, I'm out of this thing, because it's probably going back to 75. I'm out of this. I'm only in Rambus right now, and that's a 3-year hold. Guess what, kids? By this Friday, I will no longer own this stock. I'm telling you right now, 2 years later, I'm finally dumping this stock. I will be in 99.5% cash. And I'm going to be ready for earnings season. That's why we're here.
Wow. 99% cash with earnings around the corner. Oh.
Liquid and loving it.
Liquid and loving it. That is, I have a tramp stamp if you guys want to see it, but it's I have other stuff.
No, we don't want to see that. Okay.
No, we definitely don't want to see it. Get your mic fixed for tomorrow, Kenny, so we can hear you. I think the settings on are just wrong.
Yeah, I don't know what's up. All right, guys.
All right.
All good.
Guys, come into the room. I want to talk about this Humana trade. I know it's been subtle. You guys probably don't even realize that we had this one as a swing trade. My God, I don't know what that was all about, but that was a 50-point move. Thank you, Solid Jello. 235 entry. Again, I wish I would have loaded up on that one. Right, guys, I'll see you in the room. We got some stuff going on, but be sure to be here. This is it. Wednesday, Thursday, Friday, here come the banks, and then we're full blown into the earnings season. So,
oh, yeah. Hitthebit.com, guys. See you there, Kenny.
All right.
Actually,
we come back, I can barely hear him.
Before we bring on Todd, you want to pop up the calendar for me real fast, Alfonso? I don't know where it is at this point. It's probably way in the bottom, 17, I think. So yeah, we got. Look, Wednesday the banks start, and that's kind of the official start of earnings season here. We got JP Morgan, we got Citi, Wells Fargo, BlackRock, BNY Mellon, and then Goldman Sachs is Thursday, Morgan Stanley is Thursday. And then next week it really starts to pick up. The back half of this week is just kind of the banks, and then you get tech. Really, the next 2 weeks is is a lot of tech, right? Basically all large caps. So this is it. We are in the earnings season, and we're coming into it now, and we'll be talking more about this and something we've been cooking up about this for the past few months. So stay tuned for that. We have Todd Gordon in the house. Can we want to bring him on?
I just want to give a shout out to Solid Jello. The fact that we have somebody in our ecosystem that brings value to the table whose name is Solid Jello, it just makes me happy.
Yeah, he's a good dude.
Shout out Solid Jello.
Todd Gordon, he's here.
Some nickname. Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Oh, Mr. Todd Gordon. How are you, my friend?
Hey guys, how's it going?
It's going. How many days you got on the slopes so far this season?
Oh man, I'm coaching now. I'm coaching the U12s. We're on snow 5 days a week. We were in Whiteface in Lake Placid, New York this weekend for a race. Kind of beat, bro.
Wait, where are you right now? You're not home.
I'm home.
Oh, you are?
Yeah. We're in Saratoga Springs, New York right now. So Whiteface is about an hour and a half. And quick trivia for you sports nuts out there. What was the famous Olympics in Lake Placid in 1980? What was the key event?
Men's hockey.
Men's hockey.
Yeah.
Absolutely. That's an easy one. I thought that would be easy.
Have you ever ridden what's the thing that you ride that they have there?
Oh, you ride a lot of things. What are you talking about? The bobsled?
The bobsled.
Or the ski jump off the 90 meter.
Yeah. That's not it. The bobsled. Have you done that?
Yeah. They have a good thing in the summer. Like they turn it into like a mountain coaster. So you can go cruise that. It's pretty fun. It's awesome.
I'm gonna have to. We'll talk offline about the twin boy dad stuff. Todd Gordon, twin boys, further ahead than I am by many years.
Dude, and I've told you this multiple times, just to remind you: don't take any advice from people who don't have twins. JC, they don't
know nothing. They don't know nothing.
They're like, my kids were a year apart. They're practically twins. Yeah, right.
Yeah. Oh, I had Irish twins. Well, they're not twins, right? Yeah, I love the Irish, but they're not twins. They don't know. They don't understand, Todd.
Enough about the twins. Todd, what's on your mind?
What's on my mind? It's bumpy. Start the year. I feel like
love what you did there. It's bumpy. All right, I see you.
It's bumpy, and that's really all I think it is. I mean, I think as you guys have said multiple times, I was listening earlier. We're coming into earnings season. Earnings have been solid. We have a big transition of power now in 1 week. There's a lot of uncertainty. I feel like it's a lot of position squaring after, a monstrous 2024. I feel like a lot of hedge fund managers maybe wanted to lock in those bonuses that obviously they did at the end of the year, but take some positions off. I'm focused very much on the macro, looking at inflation expectations, inflation break even, yield curves. Like everyone's so afraid of Trump's protectionist onshoring, inflationary, policies, but I just think it's a touch overdone, and we can go any direction you want, but I remain bullish. We had an amazing year in the wealth management last year, head down, staying humble, but man, I'm ready for anything. I think I'll stop talking here. I think things look very, very good right now, so much to the point where we may need to start deploying hedges and raise a little bit of cash, and I don't quite know what train is around the corner, because I don't think you get hit by the train you see coming. Everyone knows what Trump wants to do, but I think he's very, very much his ego, I think, is very much tied to the level of the stock market. He's not going to do anything to let it go, I don't believe, but might be out of his control. So I'm kind of everywhere right now, guys. I don't know what you want to pull out of that.
Let me ask you this, Todd. Let's go. Let's do a little throwback here. Todd Gordon, very active Forex trader in a former life.
Yeah. It's huge right now.
Looking at the relationship that we've seen with the dollar and equities. Yeah. Number one, I personally have been really impressed with the strength that we've seen in equities and other risk assets, despite the strength that we saw in the dollar in the fourth quarter.
Agreed.
But with new multi-year highs in the dollar, targeting that 115, if this breakout in the dollar sticks and they run that index to 115, I have to believe that is most likely a headwind for equities. I think, and I want to hear your thoughts. I think that for us to have this next leg of the bull market and rally through Q1, I think a weaker dollar is a need, not a want. How do you feel about all that?
I knew you were going to go there, and I'm struggling with this multiple window desktop layout. I don't know if you guys use that. It's a pain in the ass. I very much believe
you're way fancier than I am, Todd. You always have been, by the way.
I'm really not trying. I'm just trying to make efficient workflow. Let me pull this out. Are we screen sharing or no? Can we?
Not. We can. Yeah, we definitely can.
All right. Let me just do this. Share entire screen number 4.
How many screens do you have? Jesus.
Just 4. It's not. I'm
See,
not.
you also have a lot of screens. What are you
My
talking about?
process. I like to start big picture. Daily, weekly. Actually monthly, weekly, daily, and then data over here. I just like to spread it out. I don't know. It's a process that I use. So dollar. Yeah. So we're moving into this 109. Let me go out to the weekly here. This is the continuous dollar futures. We're breaking out. We're above the 23, 24 highs here. That square root of 0.618. I know you guys love fib. The 618 square root, which is 786, it's what I call the retracement of last resort, is at 111.38. So dollar's ongoing. I don't see the dollar breakout moving much above that. I have us at 109.72, 111 is where we're at. And it's a really nuanced discussion, JC, and I love that you went here. Dollar is moving up, and recently dollar strength has been most pronounced against dollar yen. And at first blush, the dollar strength, everyone says, sell stocks. However, if it's dollar buying against the yen, that's the yen carry trade going back on. And global macro guys wouldn't do that if the outlook was for sustained high volatility, because the FX arbitrage trade works with low vol in the equity markets and fixed income. And you're borrowing in Japan at 0.5% and investing overseas at 4%. So the point that I'm making is, the other yen carry trades, non-dollar yen carry trades were following where dollar yen was going, which means the yen carry trade was going on. That is, if we look at euro yen until the last couple days, euro yen starting to head lower. Aussie yen, great yen carry trade. We were bouncing. Aussie yen's been kind of quiet because they've been under pressure for China because of the proximity to China. Aussie yen's looking a little weak. CAD yen, was moving up here in December, January. Now we're starting to turn lower a little bit. So my long-winded answer, JC, is it's a nuanced conversation, because if the dollar's rallying, particularly against the yen, being corroborated by the other non-dollar yen carry trades going up, I think it's risk on. But if you start to see euro yen start to break down.
Hold on. So yen rallying against the dollar, risk on.
Other way around, yen selling off against the dollar rallying.
Yeah, you think so? So you think this little pop that we've seen over the last couple of days in yen dollar, right? So in actual Japanese yen futures, yen's been up over the last 3 days.
Yes.
You think that's a negative?
That is a negative, and that's
if the euro is falling and British pounds are falling.
The point, it's a little FX is so annoying. I love it, but I traded for a hedge fund during the GFC. If dollar yen, if the USD JPY is going up, that means dollars being bought and yen is being sold. If yen's being sold, that means it's being borrowed in Japan cheaply and invested overseas at a higher rate, interest rate arbitrage. If euro yen, take the dollar out, like you just said, euro selling off, the yen is being bought. That is a short-term global risk-off signal. And I can't help but think, you look at euro USD, we're all of a sudden on parity watch again. So I do have us moving down into support. Trying to put a bow on this, it's a tough conversation. If the euro sells off against the dollar rallies more against the euro than the dollar rallies against the yen, that would mean euro yen comes off. That is the flagship non-dollar yen carry trade signaling risk off. So if euro dollar breaks parity on the downside without dollar yen breaking up through, let's call it 160, that's a concern. And I'll really start to listen to the message that the FX market is giving us. And I know it's so. I know that's probably not helpful for anyone out there.
I disagree. I think you're right. I agree with what you're saying.
Okay, you understand, but I'm just saying to somebody who's like, I just want to trade the freaking stock market. Like, why do I need to know about the yen carry trade and all that? Like,
the reason is because the U.S. stock market is a measly $60 trillion, while the forex markets are $4 quadrillion. So.
Yeah, it's true. And, you know, the FX market, I think it's useful to the extent that it's reacting to the bond market. FX is purely driven by interest rate differences cross-border, right? And I think, you know, since pandemic, like we've all had to become U.S. yield and yield curve experts because that's really what's driving the market and rotation. And as a result, those FX flows, higher yields, because of higher expected inflation in the country is going to bring interest rates up, which is going to attract foreign flows into this country. Stronger dollars, we all know, we're at 60 trillion and like second place market cap stock market of the world is China at like 10 trillion, right? We're 5 to 6 times bigger than the second place economy. And that is going to potentially hurt our overseas earnings. You know, but if I could keep going and stop me if this is not where you want to go, I'm watching the 10-year yield at 4.76, right? I see what's happening here. We're breaking 786 retracement. I really didn't like that we broke through the November of 24 high. We're now up against those April of 2024 highs. We've got a high back here from October 23 at 4.9. It's fine for now if the yield is moving up, the 10-year yield is moving up, provided that the 2-year yield stays where it is. And I kind of don't like that I'm seeing a 4.4% print here, but as long as the 2-year yield stays where Fed funds is expected to be, which is about 4.25, 4.5, the 10-year yield can move up to the 5%. If it wants. I don't want to start seeing above 5% 10-year. What that's going to do is that's going to take the 10-2 yield curve further out of inversion, right? So it's like I hear the concern pre-administration shift in power going to Trump, earnings season coming in. There's a move up in yields. It's pushing the 10-year up to 5%, but provided that 2-year does not start to price in Fed rate hikes, we could be done with cuts and that's fine. But if the 2-year stays where it is and the 10-year continues to go up, 10-2 goes up, and that's the shape of a recovering economy, right?
So the ones and the twos had not been confirming what you're seeing in 10s and 30s. 10s and 30s have been making new highs.
Right.
Ones and twos had not. Twos now are. Ones still are not. 1-year yield still down there, curling up, but twos did make new highs last week.
I know. I'm watching. I mean,
and then hold on. So the steepening yield curve, that's not a good thing?
That's a good thing. That's the shape of a recovering economy.
But you're saying if twos get going, then that yield curve starts rolling over again.
That's the problem. If those twos start catching up to where 10s are, that's a problem.
Because now we're talking rate hikes.
Right. And I look over, I'm looking at inflation break evens. I'm looking at how about 2-year expected inflation? So 2-year expected inflation in blue, 2-year yields, the nominal yield in red. You know what's happening is expected inflation moving up on the 2-year. We're at 2.5% inflation, which is where the Fred database is. Like, okay, is inflation expectations really popping up? I don't think so. I don't see it unless there's something I'm completely missing. And I mean, you just look at the overlay of the 2-year expected inflation and 2-year yields, like it's right on. There's a bunch we could look at. Look at the Fed funds 2-year spread. So Fed funds in red, 2-year yield. We got up to a pretty extreme level here in August, and that's come off. We're down right down to sort of the middle where Fed funds is on top of 2-year yields. It's small, but they've joined in the middle. So I feel like in the short end, JC, to your point, short end interest rates are at a good point that is reflective of the strength of this economy. GDP is still growing 3%. Earnings are still crushing it. Our real yield, you got to think about this. Like, yeah, okay, interest rates are 4.5%, but inflation's 2%, 2.5%. So your real effective cost of borrow is 2.5%. It's the same thing as it was 5 years ago. So companies can still borrow, but if you're servicing a debt and a 2% inflation, that's helping you. So I'm looking at what's changed, and I'm so bullish on this AI evolution. I totally hear what you guys are talking about in the quantum computing. Jensen Huang, shot that balloon out of the sky. We're 10 to 15 years before being useful, but I don't know, man. I think we're in a pretty significant bull market, and there's too many uncertainties over the next 2 weeks, and people are taking profits. I don't want to get too crazy and take risk off the table, because I think once we get through this little bit of macro uncertainty, we continue higher. But your point, if we start seeing 4.8, 4.9, 5.0 2-year yield, okay, something else is changing here.
I love how we're diving right into the intermarket stuff. Can't help myself, Todd. When Todd and I get together, that's how we roll.
Dude, I love it. Wait, there's one more thing. Can I if I can find this chart?
Please.
I threw up. I have oh God. I think I need a lot of screens, JC, because I'm also not very organized. Have you watching dollar CNY?
Yeah, of course.
Where the hell is? Oh, right here. Right here. So dollar CNY and is 7.35. Stop me if I'm not sharing this screen.
So explain to people what the CNY is, the Chinese yuan. Why does it matter?
Exactly. So, everyone is focused on Trump tariffs and exploding the cost of goods as we import higher prices. But I think what he's really going to be focusing on is the peg on the Chinese currency. It's pegged to the dollar. It's artificially suppressed. I think he's going to try to use tariffs as a bargaining chip to try to bring them to the table to adjust that peg. And if you look at this dollar into CNY, all that means is if this chart's going up, the first one's strengthening and the second one's weakening. Dollar yuan is now at the highest level, which means the yuan is at the weakest level since 2007 or 2007. So it's reflective of the weakening Chinese economy for sure, but also, it's artificially suppressed in terms of its value. And I think Trump's going to go after that. So if we start breaking through this triple top, that's a problem. And the last time we were at this level was 2007. And JC, I know that was the last time that U.S. equities, that was the last time that Chinese equities outperformed U.S. equities. It was 2007-8. If you look at an FXI SPX ratio going back, that was the peak right there. So I think we also have to watch this triple top in dollar China.
Do they come in and buy the yuan, or does it just fall apart here?
I don't know. I mean, it depends on how negotiations go. And if we could somehow back away, that dollar weakens up, Chinese currency comes back a little bit, fails at this triple top, that's going to be supportive of U.S. equities. If we break through, Trump's going to have a cow, I can tell you, and we'll see what happens on that. But I think that's a very key market here in the FX side.
Can we talk about sector rotation?
Sure.
When it comes to I think that a big misconception out there when it comes to sector rotation is constantly looking at the ones that are making new highs or pushing up against new highs. I'm just as interested, maybe even more interested in the ones that are not making new lows, right? So when you look at the new lows list, the new 52-week lows list has been non-existent for a long time, of course. Yep. So I like to look at the 1-month low list, 3-month low list. And when you look at those, you've yet to see any expansion at all. So you haven't seen any expansion in new lows whatsoever. The reason is because whenever the stocks that are most vulnerable to make new lows are down there, vulnerable to break, they come in and buy them up, right? We saw it in discretionary in the back half of last year. We saw it in industrials before that, technology before that. When they need to step in, they do. We've seen that every single time, which is why there's been no expansion in the new lows list at all. So when it comes to putting money to work, how are you thinking about it in this environment? Sector-wise, in the first half of the year, where do you think the outperformance is going to be?
Yeah, and that's another good point you bring up. XLY, you look at XLY, we could probably pull that up. Let me see if I can do that quick. Again, I'm trying to push back, and maybe I'm a bit biased. I'm trying to push back on this inevitable inflation story. Why are XLY stocks outperforming? If you look at, let me share screen here. 4. So you just look at XLY SPX. XLY has been outperforming SPX since July of 24. It peaked out in December. We've backed off a touch. Consumer discretionary has been great. You know, and I got some names in here. This is our active ops, our fast money portfolio, so to speak. Shake Shack, DoorDash. I consider Costco consumer discretionary, even though it's a staple. Kava, like there's some really good names in there. But you know, what I'm doing, JC. Oh shoot, I'm not sharing screen, am I? That's all right.
It's okay.
You know what I'm doing, man, is consumer discretionary is a huge sector. There's so many different sub-industry groups. Yeah. I'm doing a lot of scanning and filtering for the fundamentals that I want in companies that belong in the portfolio. I have a view on industrials. I have a view on consumer discretionary. Comms is a weird sector because it's driven by 5 or 6 stocks, and that's about it. But, you know, I'm really looking at the company specific, how the technicals fit, the fundamentals that we're looking for inclusion in the wealth management portfolio. For me, I don't know, maybe I'm just not evolving or just going in a different path. Looking at the sectors, the way they're moving, the 11 sectors on top of each other, I'm not seeing a lot of clear message in here, to be completely blunt. Tell me if you see something different in here. I don't know what the takeaway is looking at the 11 sectors right now. Tech is strong, right? But they're taking profits on tech as rates have gone up. But I don't know. What you tell me what you're seeing.
Yeah, the takeaway for me is a lot of range-bound markets you're seeing in a lot of the sector indexes. Also, you're seeing that in the bellwethers and the Dow Jones Industrial Average and the Dow Transport. So you're seeing it in the bellwether stocks. You're seeing it in sectors. That's been the case for some time. Crypto also, for that matter. Yeah. One thing that stands out is the 560 basis points of appreciation in copper futures last week. Can you go up slide 2 there? You know, when you look at, you know, you weigh the evidence and you look for, you know, risk on things, you look for risk off things, you know, and I'm going, you know, chart by chart, asset class by asset class. I see high beta outperforming low volatility last week. I see consumer staples making new all-time lows on a relative basis last week. The strength and discretionary, like you mentioned. Copper futures up 5.5% last week. You know, what do you make of the strength in base metals that, you know, if the world is about to fall apart and we're entering a bear market, you would think that copper would not be acting as well?
No, it is weird. I mean, I'm seeing crude oil start to break some resistance finally. So is this the inflation trade or is this a growth trade, right? Is this good inflation or is this expected of future growth? And copper is very much tied to China. So do we start looking at Hang Seng and Shanghai for potential bottoms? I don't know what to make of commodities. I don't know why copper is doing what it's doing. You know, I think gold too. I was short gold for like 3 or 4 weeks, short gold futures. I covered my short. I broke even. I made just a little bit of money actually. I was using it as a hedge. I think gold is now correlated to the stock market. Gold's starting to look supported now. Copper's looking better.
Also the resiliency in gold despite that strength in the dollar. I mean, hard to ignore, right?
100%. Yeah, I was short. And I had I had like $8,000-9,000 and just my own money and profits on it. I wound up scratching the trade, made 500, and I was like, freaking good. I'm glad because again, the strength in gold again is correlated to the direction of the stock market, and the macro indicators that would make gold break down or break up are the same that would make the stock market go in the same direction. People don't understand that gold and stocks are correlated right now, and they've been for a while, which is fine. And I think Bitcoin is even more. I mean, how about Bitcoin gold? Do you look at that ratio at all?
I mean, it's driven by the numerator, right?
Yes.
I mean, yeah. I look at the ratio, but at the end of the day, like, I mean, it's the numerator, is it not?
Yeah. Well, I mean, it's a much higher price.
What does the Bitcoin gold ratio mean to you?
Well, I just look at this. This was kind of cool, I thought. We just broke it.
Share the screen. Show the screen. Let me see.
I think I am. I hit share screen.
There we go.
Oh, there we go. So this is weekly. We just broke through almost broke through a triple top going back to 2021 in Bitcoin gold ratio. Is it driven by the numerator? Yeah, just because it's 100 times the price.
Well, not so much the price as it is the beta.
Price and beta, right? Realized volatility. But I thought this was kind of interesting. And I think Bitcoin is even more correlated to the direction of the growth trade. And the fact that we tried to break above or pulling back here a little bit. So I guess it's 33 times, not 100. So the Bitcoin gold ratio is trading about 34 right now. So if we can hold into the 33 area, I take that again as risk on, because I still think crypto is correlated to direction of semis and some of the software stocks that are leading in the new age. So yeah, no, it's I think it's incredibly important to be kind of fixated on the macro relationship right now. And then from an Elliott wave point of view, which I'll forever do, I don't really want to explain it to anyone. It's just what I do. I think gold is just heading into a triangle. If gold wants to find one more little test down to 26.5 and start to hold, probably go time again in gold on the upside. But yeah, everything's looking. I think we just got to get through the uncertainty of the transitional power and see what Trump does. It's such a big uncertainty, and I think people are just taking money off the table.
Do you think something magically is going to happen on January the 20th? Markets close that day, by the way. But you think something like, is it really about that?
Yeah,
is there precedent to this January 20th transition that we've seen in the past, in your opinion?
I wish Jeff Hirsch was on here, but there's going to be a lag time until any policies that he, is going to be impactful on the market are able to be set into motion. So I think it's a lag time. Is a narrow majority in the House. So we'll see how many House Republicans side with him, because the consensus on Wall Street is he is pro-business, but can he get everything through that he wants? I think there's just too many uncertainties. I think people are taking profits off the table right now. But I mean, I'm all over the place. But look at Nvidia. Nvidia made a new high. Was it last week or the week? New all-time high in Nvidia, right? Yep. And then we backed off. You look at the gains in some of the semiconductors, like Nvidia is only growing 80 or 90% EPS year over year now, and the shine is off. The shock and awe is off. Like some of these companies like Marvell and CRDO, I mean, some of these semis and Broadcom, it's insane, the earnings, the real earnings that are coming across these companies. Like that's what's driving it here, man. So does that change anything? No. I don't think so. And Jensen Huang just came out and he was pissed off at the move Biden made for clamping down on regulation in terms of what we send off to China. I don't know. Is Trump going to ease that up? I don't know. I just think it's going to be a more pro-business environment, and that's what Wall Street is expecting. And I don't know. What do you think, dude?
I'm just sitting here counting waves, Todd. Counting waves and selling strangles, naked as could be in my birthday suit.
Don't waste your time in options. Come on, dude. We're in a generational bull market. Use options for hedging, JC. We're in a generational bull market. Stocks are making 80, 90, 100%
I knew you were going to go on a rant. I'm just messing with you. I'm not counting Elliott waves or selling strangles. Just to be.
Oh, okay, all right. I knew you were busting my balls on Elliott wave side. I didn't know about it on the options side.
No. But on a serious note, joking aside, because I mean. Number one, I'm curious to hear your wave count, maybe on an S&P 500, if you'd like to share that. And by the way, granted, I have not sold any strangles, but with the range-bound markets that are out there, with so many, selling strangles is probably not a terrible idea and collect some income. I've been talking about it in our internal chat with Sean. He keeps pushing back on it, like you just did.
Yeah.
Now, granted, Sean is an options trader. Whether it's a bull market or a bear market, but throw me a wave count.
Sure. It's very unclear right now. The Elliott wave community is kind of, we're having our own little mutiny here. Nobody can agree on it, and Elliott wave is forever going to be a part of me.
Nobody can agree on the wave count. I can't believe it. That never happens.
I know, and I've never said that in my 20 years of doing it. But it's pretty unclear right now, and I think a lot of it has to do with the function of, again, not every stock is participating in growing 50 to 100% year over year EPS, right? There's companies that are leading this forward, and there's companies that are just, maintenance management, not, large cap companies aren't really driving the indexes. Indexes are choppy here. So
can we see a count? Can you throw up his count, Spencer?
Yeah, I'm sharing. Come on, Spence.
I got it. We got it.
Come on, brother.
Wait a minute. I don't see it, Todd.
Share. There you go.
There we go.
All right.
Zoom in there so we can see these numbers. Zoom in, Spencer, so we can really take a look at this.
Hang on. It's Monday. I don't have instant energy Monday morning.
Dude, I've been firing on all cylinders since 4:30 this morning listening to Motley Crue. I've been hearing too much Motley Crue lately.
You know what's
it's not
funny?
healthy.
I brought my radio up at the start for the start yesterday. I was playing Kickstart My Heart for all the racers, these 12-year-old racers. Like, who's Motley Crue?
There you go. There you go, Todd. I see you, dog. I see you.
Oh yeah, bro. All right, so I'm very bullish. Okay, so let's start the count at COVID lows. I believe we're in a third wave. Okay, so if you look at percent distance travel from COVID lows up to the 2022 high, that was only 119%. So in the wave theory, in any Charles Dow, you have three phases. I said three phases of market, trends. You have accumulation, widespread participation, and distribution. The widespread participation phase is expected to go at least as long as the accumulation phase. So wave one is the basis, the minimum expected distance in wave three. So 119% up would give you 7,600 in the S&P. More typically,
because correct me if I'm wrong, wave three can't be shorter than wave one. Do I have that right?
Or five. Three can't be shorter than 1 or 5.
Three can't be shorter than 1.
Three can't be the shortest. 3 has got to be longer than
the shortest, but it doesn't have to be the longest.
Correct.
It just can't be the shortest. Okay,
Yep.
fair. Okay.
Yep. So 100% is going to be at 76.75. Percent distance travel from COVID to 2022 projects up to 76.75. The 618, which this is the 618 projection, you take 119%, multiply it by 0.618, that's going to be at 56.81. We're getting a little stuck around here. So I'm like, ugh. And that started to happen in like September of 24. So we've got to get some clarity within this kind of mess that you've been mentioning since the summer of 24, November. And I'll zoom in here. We've got to get through this mess. Then we can start reaching for the 100% Fib projection. And, people are going to think I'm crazy, but a typical wave 3, if in fact we're in a secular bull market, the 1618 is up here at 12,000. I mean, this is 5 to 10 years out, right? Probably from here, it's another 113%. So maybe 3 to 5 years out. But the whole problem here is you get inside of wave 3, you want to be able to count a nice, smaller, clear motive impulsive pattern, which is a smaller 5-wave move itself. This is where it gets a little messy as we get off of this weekly into the daily inside of this 3. Here's where it gets a little messy. And I was just on a 2-week chart. This is a daily. Let me just go 1 week. So within blue 3, which is up here within that, I'm looking at 5 smaller waves. So I'm thinking green 1, 2 into 23. This is all wave 3. And then this as I said, summer 24, October, November, December gets messy. If we can find a wave 4 support zone in here, if we could look to find some support about 5,500, then I think we go and start to approach that 76.75 into 2026. So even smaller down to the daily. This is getting into a little bit more minute sort of specific Elliott wave stuff, but I'm thinking it's C wave down. If we can hold the 58 to 56, then I think we can go up on our way where we were on the higher degree weekly and 2-week chart. I'm considering putting some hedges in the portfolio in the wealth management down into like 5,700 to 5,500 put spread, just in the event that we go down and test this. But I really think we need to hold this zone. And then as I go back up to the higher time frames, that's when we can re-engage. Wave 4 is done. And then we can go up in, weekly. We can go start hitting 50C. Whether we get up to the 100% or not, we shall see. To your point, JC, if we don't get up to 100%, that must mean that 5 needs to be shorter than 3 and 1 to keep this thing alive. But longer term, just buttoning this up, I do think this is the path that we're heading on. I think the wave kind of just showed you over the last 6 months may not be accurate. I think we're still in this longer wave 3 which this is our big target for 2026 right here, 76.75. Does that make any sense?
Can we take the all the lines and shapes and colors off? And I got one more question for Todd.
Yeah.
And that goes to sentiment. If you want to take that off, Spencer. If you want to go to if you want to talk about sentiment at all, I'm seeing an overwhelming amount of pessimism out there, despite the historic returns that we've seen over the last couple of years. Dow futures are up 70 points this morning, actually, with the Nasdaq down over 1%. Semi's getting hit pretty hard. But talk to me about sentiment. Where do you think? And sentiment is really difficult to quantify, and it's hard to gauge something that we try very hard. I think we do as good a job as anybody, and I could tell you for a fact that it's incomplete and inconclusive always. And I think we do as good of a job as anybody. So I'm curious to hear your thoughts. Where do you think we are in the sentiment landscape? You think it's as pessimistic out there as I'm seeing?
I do think it's very pessimistic. I think unfortunately I think the media, both the traditional media and thought leaders, quote unquote, on social media are continuing to spew fear and talk about all the things that can go wrong, because we're in a high-speed information environment. The very same reason that we're in such a significant bull market, with Nasdaq up 38% last year, even though we gave up 5 or 6% at the end of 2024. The same reason in technology that's driving the equity markets are there. Some of the same reason that there's so much fear such quickly dispelled around the market, and it's creating more fuel to have to chase at higher prices. So I think short term it's impactful on a negative basis, but longer term it's just going to pull people in. And I think there's a lot of reasons that look good on paper and headlines to drive clicks, to drive fear, because that's a much stronger emotion, I think, than greed. And again, social and traditional media outlets benefit from driving that fear. That does create a lot of ammunition on the sidelines that needs to chase at higher prices.
Biggest inflows to money market funds last week since April of 2020, right before the greatest 52 weeks in the history of the stock market.
I haven't looked at it. Are we at, what's the number? 7 trillion? 7 trillion in money.
The biggest inflows since April of 2020 last week.
It's insane, and I don't know, man. I'm going in a different path, right? I'm not so much focused on the research business. I'm focused on my wealth management business. And I've just had so many one-on-one conversations. And all I could say is, from a small sample of clients who we work with, you should get to know the people. And you do, JC, you run events. You should get to know the people that listen to us. They're smart. They're accomplished, they're successful, they overthink everything. And unfortunately, it's the doctors, lawyers, engineers who are really good in their own respective careers that make them pretty lousy traders and investors, and they need us for it. They overthink everything. And sometimes you need to sort of set that highly analytical brain aside and dig deep down and say, listen, this is what everyone is thinking. This is what everyone is driving. What's actually happening? Have sort of just be able to separate out from the noise. And, I'm seeing way too many smart people being underinvested in this market, and their lives are negatively impacted from lost returns. That we're in a massive bull market right now. And you and I have the chops where if things get nasty, we can protect, but this is a bull market right now. Stop overthinking, realize the negative pessimistic sentiment that's out there that is causing people with tens and hundreds of percent, return lost in their portfolios. It's kind of sad to see. I got to be straightforward with you, but the work you're doing, JC, and the work that I'm doing in Spence, you're right there too, brother. You're positively impacting people's lives by making sure that they're able to set aside the self-serving people who are trying to drive negativity and fear that ultimately make them buy at higher prices. So it's an important job we have, guys.
Well, I appreciate all those things you're saying. I want to touch on one more thing before I let you go. What you were saying about very successful, very intelligent people overthinking the market. You see this a lot. You see this with athletes that have had a lot of success in whatever sport they play, try to transition that into the market and fail. You see that in venture. venture capitalists, participating in public markets, struggling. You mentioned the doctors and the lawyers and the engineers that have had a lot of success in their careers and have a hard time translating that success into the market. This is hard. And just because you did something well that has nothing to do with this doesn't mean that's going to translate. In fact, it's usually the opposite.
Yeah.
So, just remember, no matter how smart you are or how successful you are at other things, this is something completely new. And by the way, there's no barriers to entry. If you want to be a pilot and you want to fly a plane, in order for them to let you do that, you have to go through all this training. You can't just walk into a plane and start flying it. If you want to perform surgery, open heart surgery, you can't just walk into a hospital and cut somebody open. There's a lot of training that goes into this before they let you do that. In the market, on the other hand, it's all good. Not only can anybody do it, we'll open an account for you and we'll give you 30 days of free trading. Let's fucking go. I'll even give you $100 for opening an account. It's very, very different. So let's understand the lack of barrier of entry can be very dangerous if not taken responsibly.
And it started with the E-Trade baby commercials. I mean,
commercials.
E-Trade. I mean, as soon as they started making the buy-sell platforms fluorescent green and pink and red and flashing lights, like, can't you see what's happening here? We're Vegas, but right in front of our screens here. So, make your screens dull, make your colors not flashy. Just so no, the
dopamine fix somewhere else, right? Learn the rules, Shankopotamus.
Right. People, and this is the other conversation we have. They're like, Todd, I'm trying to do this for 2 hours a day, and I just can't keep up, dude. We work so much. This is a full-time job. To keep up with these markets and this complex economy we're in. And this is not like, oh, we're too smart, you can't understand it. No, we just stare at these screens 10, 11, 12 hours a day.
And by the way, I love it. And I know Todd is right there with me. We love this shit. So
Absolutely.
Yes, it's a job. Yes, it's a career. But, it started with the passion first. And if you're not excited for Monday morning, if you're not excited for Sunday night futures to open, if you're not excited for those weekly closing prices, you're in the wrong business. For me, I don't know what else I would do. What am I going to do?
This is what I'd be doing anyways. You and I got the same start in Hoboken, New Jersey, right?
That's right, baby. Let's go. Shout out Hoboken. New Jersey, very underrated state of New Jersey.
Well, yeah. I met my wife in Hoboken, but no, we'd be doing this anyways. I love this game, man. I was lucky. I think you guys the exact same way, man. I knew I was doing.
I met a lot of potential wives in Hoboken, but none of them.
Okay,
me too. No, but this is what we'd be doing anyways. You got to love the game, and again, to people out there, just realize the limitations of your time. You can love it too, but if you have a family and full-time job that is very demanding, just realize this is a full-time job right now. I'm not trying to scare anyone away, but it's a complex market. It's a new world we're all trying to understand. There's so many opportunities out there, man. I'm bullish. I am bullish.
Well, market's been acting well since you came on, so I appreciate you being here, Mr. Todd Gordon. Expect to get an email from Mary Thwaites inviting you to a little get-together that we're going to be having.
Nice. Nice.
So, ladies and gentlemen, Mr. Todd Gordon, we'll put the link to where they can find you in the show notes. Todd Gordon, you are the man. I love it. We covered a lot. A little Elliot wave, a little intermarket analysis, Forex market, sector rotation, sentiment. Let's go, man. This is great.
That's it, brother. Guys, thanks for having me. JC,
thanks, Todd.
Can we please get another ski event on the calendar? That was the best event I've ever been.
I know. I'm on it. Whistler. I'm thinking Whistler.
Woo, there we go, baby.
All right. See you, Todd.
Thanks, guys.
Oh man, pick something further than Whistler, please. Pick something just a little further away.
But Whistler's awesome, dude. Whistler's so fun. It's a party. Whistler is the Aspen of Canada.
It's too close. All right.
But it gets cold, bro. We can't do a January. It's gonna have to be a late March, early April.
Yeah.
Spring skiing.
Yeah.
What do you guys think?
Yeah, I'm down.
Strazza's I don't ski.
Yeah, but I like the mountains. That sounds nice.
It does sound kind of nice.
All right, it's 9:45 here. I know we have Jason Paret, and I want to bring him on in a minute. But before we do,
why are semis getting hit overnight?
Why are semis getting hit overnight?
Yeah, what was the selling this morning on the semiconductors? Nothing.
There wasn't a semi-specific headline that I saw. It was really just more of the same.
I'm gonna have a confession to make. I I wanted to make an effort and listen to a Jensen Wong's presentation. And I sat there, I got a snack, I poured myself a glass of wine, I was ready to go. I don't know what the fuck this guy was talking about, man. You know, I tried. I swear to God, I tried. I did the best I could. Yeah. It was like Chinese, man. Yep. I was like, I can't do this. And I turned it off. And it had nothing to do with him. He seemed like a lovely man. I didn't know what he's talking about, man.
I love what you're saying. That's real, man. It's a new language.
I tried. I swear.
I can pick up bits and pieces. I try.
Yeah, like every third word. I'm like, hey, I know that word.
There's so many letters and numbers and like G's, like random G's.
A lot of these conversations for me get to a point of depth where there's no value add because I understand close to nothing. I'm so with you. Yeah. The earnings calls, Q&As are a little bit better. They're tailored more like it's like the executives.
I'm never going to do that though.
It's like the executives are kind of talking to like, you know, a child and really laying it out and explaining. But some of these conferences and these keynotes where he's talking about robots and physical robots and the difference between, it's like, it sounds cool.
Like one host says Jason's getting ratio. He was speaking Taiwanese. No. He was speaking English and I still didn't know what the hell he was talking about. And in fact, his accent isn't even that strong. So like, it was English, like through and through. It's just, I'm just not smart enough to follow along. Like, it's just, listen, I get credit for trying though, right?
I got some scary charts. Do we have time for 3 scary charts?
Yeah, sure.
Yeah, bring in Jason. I want to hear Jason's thoughts on your scary charts.
Are they all right? Whatever. I'll bring Jason and we'll do the scary charts with him. How about that? That works.
Dude, the Jason has the best intro, bro.
Dude, I'm so impressed by it. It makes me look so much cooler than I am. I love it.
I would agree with that. You're definitely not as cool as that hype video makes you out to be. Nice guy, but that's another level.
That's next level, dude. I used to do cool stuff back in the day. I don't do that cool stuff today, but yeah.
Dude, can we get some sorry, Strazza, but we should get some old B-roll of you doing flips and stuff to throw in.
I know.
Oh, dude, I got it all.
Hey, can you get that to the fellas? Let them do the thing. All right.
Yeah, we could throw it in the intro. That'd be even better.
No, it's too good. It's too good already. We can't add more badassness to your intro.
Jason Furs with a rather eccentric background before his time in the markets. Would you say?
Probably the most.
He used to take more risk back in the day.
Jason Furs took the road less traveled to the world of trading.
It's, you know, you were saying earlier about the athlete stuff, and it was like, yeah, like it's interesting because you have so many athletes get into trading or finance, and once again, it's like they don't study it. But it's like, for me, it's like been all these years of doing all these different things, and finance was always kind of a part of it, which is kind of really weird. So it's like, if you really go through my background, and Steve did a great video on that, on Off the Charts. If you really go through the background of it, it's kind of really wild, but also it makes sense.
You're weird. You're wild. That's why we love you. Can I try to scare you both with 3 charts? Give me 3 minutes, 3 charts, and tell me why it doesn't matter. Jason's going to be like, but the trends. JC's going to be like, I need to see it. All right, hit it. Europe. We are losing the United Kingdom. Okay? This weakness.
The same United Kingdom that did nothing for 20 years during one of the greatest economic expansions in world history. That same United Kingdom?
There are massive bases out here in developed Europe. I think we need them to go. There's a big base in Canada. These ex-US markets have the chart setups right now that they can take a leadership position and carry the baton for a while, take on some sort of leadership position, right? That I think the broader market needs, but they're not sticking it. They're moving in the opposite direction. Here's the UK. This is MSCI United Kingdom. Just as an example of what we're seeing all over Europe right now. The new lows breaking down from a textbook top, back in the box, below the 200-day. This is gross. This is ugly. This is don't touch sort of stuff. Losing Europe. That's point 1. Next. Next chart. Boom. Cloud computing. Let's look at the leaders. Let's look at the best stocks. This is cloud stocks. JC talked about Salesforce. It's the same structure here. We are failing at a key level, a critical level, coming off a very extreme overbought reading, in my opinion. This is the percent from the 200-day moving average and the lower pain here. You're seeing it hasn't been this high coming off an extreme level like this since we topped out during the last cycle. Back in the box, even the best stocks are not buys here. Point 2. Third chart, please. Small caps. We need them. Speaking of groups that we need, speaking of breakouts that I think need to stick, same as Europe, right? Cloud computing stocks. If they want to correct for a while, take a breather, fine. But we need small caps. We need somebody to pick up that slack. Small caps getting slammed back in the box. What's most concerning here is the volatility. It is not uncommon for volatility to spike in both directions at key inflection points, key turning points in the market. We've seen the highest one-day move to the upside and the highest one-day move to the downside in 2 years in terms of the upside move since COVID, since the pandemic, right? We're spiking in short-term momentum. If you look way to the left-hand side of this chart and the lower pane, look at that momentum just spiking in both directions at the March and April 2020 bottom. I wonder if this is going to be a top. We look back and we say, oh, look at those volatility readings. 3 messy charts for a messy market. I would say the 3 downright bearish charts. How did I do?
Bitcoin.
It's like a top.
Big one. Small caps and transports look exactly the same. So
Sure.
you could replace this chart with the Dow Transportation Average. It's going to be very similar. And look at software, right? If that CRM breaks down, then software in general is probably going to break down as well. To be clear, they have not. But those will be the ones I'm watching. I got one for Jason. Slide 2, please. Jason, this one, it's a little cute. It's a little cute, but valid. Cute, but valid. We are filling the gap from that Q4 2023 face ripper that we got at the end of 2023 when small caps ripped. Stocks ripped, everything was working. We had those crazy breath thrusts, momentum thrusts. Everything was working in November and December of 2023, sparked with this rally in bonds as yields came off tremendously. We have now officially filled that gap. Jason Paret, am I getting cute? Is there validity here? Or both? I could be getting cute and it's valid, right?
I think it's a little bit of both, right? And like Steve said, I'm going to always come in and be like, well, the trend is down. I'm short bonds, so to me, it's when the trend is down, you don't want to really get too cute in those situations. However, when you're looking at this type of double bottom setup and you do look at gap fills and you do see, let's say we see some volume start coming in at the bottom, we get a nice reversal out of it. I would say that could be a bottom. Now, once again, I keep talking about the fact that if bonds are going to ever make a move, it is probably now. And I think that's one thing we just kind of have to sit on is bonds are going to make a move. It's probably now. Let's see if there's some momentum behind it. Let's see if it does reverse higher. And if it does, maybe take a trade at that point. But for now, it's just, that's a tough falling knife to catch.
It is.
Is it me or are stocks trading pretty damn closely with bonds these days? Look at this coil. You look at this little bear coil coming off some weakness here, right? Resolve to the downside. And then go look at all of those charts I just talked about. Got these little bear flags, boom, and now we're resolving lower. This one was just leading by a few days, huh? That's what it looks like to me. Zoom in.
Very similar, actually. And I think it's going to be common, right? When you're looking at the overall stock market, when you're looking at the bond market at this moment in the market, when there's a lot of pain, a lot of pressure, these are trading very much together, but I'd love to see a reversal higher. If we actually saw a reversal higher here, I would actually be more bullish on stocks too. I think stocks don't look terrible, but once again, you'd have to get to certain areas. I just think we're rotating out of certain areas and into other areas, and that's all I continue to see. But once again, it's still a scary time because the overall stock market, the S&P 500, is concentrated in the stocks you're bringing up, Steve. So that's something to kind of be cautious about. I think the Mag 7 isn't probably the leader this year. I think we just will rotate into different areas. But that's my thought. It's not a trading plan per se.
All right, what's on your radar? We got a couple of minutes. We're just firing questions at you. What are you seeing here with the Dow up almost 200 points on the day? NASDAQ well off the lows. A little bit of a bid in bonds. Finally, still no crack in the dollar, but that's front and center for me. What are you saying?
No, same thing. I'm looking at the dollar. Look at it every day. I just see the positioning. Once again, it's two different things, and I love Grant's got the daily number. Great research. If you guys aren't signed up, you guys should sign up. So the daily number is basically saying we're at 100%, basically meaning all stocks, or sorry, all currencies against the dollar are moving up against the dollar at the moment. Tops happen around those times, but once again, it's not something you want to fade. But the positioning at the same time continues to look very bad for the dollar. So any movement, any type of fundamental news, any type of anything is going to make the dollar come down quite a bit. However, don't fade it. Once again, it's the thing we keep talking about. When it comes back into the range, I'd be very interested in fading the dollar again. Out of the range, moving in an uptrend. Not that interested at the moment, but I am looking at the commodities. I mean, we're getting longer and longer commodities as the dollar is ripping, which is really wild to me. So I think that's also kind of saying it's either going to be one of two things. Either the dollar continues to rip and it puts major pressure on the market. We get a deflationary kind of shock, or it moves the other direction and we just see the commodities continue to take off and the dollar start to peel off a little bit. So that's my two thoughts on the dollar.
I like that, Jason. I think that's a prudent course of action. It's all about that range.
Tradable, man. You got to make it tradable. And if it's actionable and if it creates alpha, that's the way to look at it. And I think either way, we can make some money here.
Are you breaking down the dollar into different crosses? How are you thinking about the dollar? Are you looking at the dollar index?
It's all bearish dollars. Isn't all the positioning bearish dollars for the most part?
Yes. So if you're looking at just the dollar index, you are seeing that there is a bearish positioning if you're looking at the COT report. And also if you're looking at the currencies like the euro, the Aussie dollar, the Kiwi, all of these have major commercial buying. So at the moment, we're kind of seeing this very lopsided positioning, meaning that if anything happened where the dollar started to fall a little bit, it's going to fall pretty hard pretty quickly. So once again, it's don't fade a trend. But also, if you're going to do that, look for reversals, look for news failure events, look for possible patterns, look for it to get below the 10-day moving average, something to just give a small signal that this might be reversing. And I think it's a good trade at that point. Right now, I wouldn't fade it, though.
All right.
I can envision a world where dollar falls back into its range, and then all of these failed breakouts that I just showed are failing, ending up just being false starts, reversing higher, repairing that damage. But JC, we got to see it, right? We got to.
I couldn't agree more. I think you're spot on, Strazza. That is what I think happens, by the way. But to your point, you got to see it. Dollar hasn't rolled over yet, so we haven't seen it at all. If you want to hit the recess, we'll get going. I just want to say how excited I am to hang out with everybody in New York City in a couple of weeks. We get together a few times a year. Everybody flies in. We share ideas. We talk markets. It gets better and better every time we do it. I don't know if you noticed. When we went out to California last year, I'm like, there's no way it's going to be as good as New York. It was better. Then when we go to Chicago, it's like, dude, we went to New York and Sonoma. There's zero chance that Chicago outperforms. And sure enough, it did.
And yeah, so 2 weeks from tomorrow. So
yeah,
good stuff.
Very excited.
All right. I don't know. I watched a couple documentaries this weekend, but they weren't especially good, so I won't bother recommending them. Yeah, I don't really have anything, honestly.
I got a couple things. First of all, we watched that movie Interstellar. That's supposed to be so good. I have no
I
idea.
love that movie.
I fell asleep when I watched it years ago.
Oh,
Dude, 3 hours long. They're like flying through fucking space. I have no idea what's going on. I don't understand black holes. I don't care to understand black holes. Like, it's got nothing to do.
I've seen that movie like 4 times, man. I love that movie.
It's like,
Yeah, I'm with Strazza on this one.
This is the worst freaking movie ever. And I heard so much good stuff about it. I have a new office pet. Came home from grocery shopping yesterday. This is a red-eared slider. He was just hanging out on my front walkway. So this is Myrtle. He's also right here right now. This is Myrtle the turtle. He's very friendly. Look at this guy. I don't want to spill water on me.
Wait, is that an actual?
Yeah, it's Myrtle.
Did you put the turtle in an ashtray, bro?
Yeah, this is an antique though. This is an antique crystal ashtray.
In that case,
it's yeah, there he is. So basically an open floor plan for Myrtle right now. He really kind of likes the open concept in his ashtray, but we did order him a tank, and he'll be a new office pet.
Myrtle the turtle, does he smell?
Not yet, but I'll keep you updated. I was wondering the same thing. For now, he can live in my office. We'll see how the smell thing goes. He's tiny. He's this big. So,
all right. Well,
one with the animals here. And then I just want to say, I've been waiting for JC to come back so I could do this recess with both of you guys. What an amazing time we had in Tennessee. Shout out Great Smoky Mountains. I think we'll go back like every year now. Tennessee is just such a lovely place. I wanted to show a couple pictures of me looking majestic in the mountains. We had like a spa getaway weekend. We did like legit log cabin, like the hot tub up there and a fire pit. It's scary getting here. There's no guardrails. You're going up. It was like 25, 30 degrees.
You're not on 995 anymore, Toto.
Such like these cute mountain towns. Absolutely loved it. Where we were, it was called Sevierville or something. And honestly, for me now, and we didn't give like Nashville a real good go. We were there for a day and a half, but Smoky Mountains.
Oh, that's plenty of time.
Yeah, like give me the mountains over the city all day. It was just so nice. I had a great time. So
mountains are great. Nashville. I like Nashville. I don't know what Spencer's beef on Nashville is.
It was fine, dude. I mean, I thought I lived in a tourist town. That Broadway is something.
There we go. That's it.
I'll take the live music on Duval Street over the live music on Broadway.
Whoa.
It was fun. It was great. We went to like Justin Timberlake's restaurant or something. It's cool. It's like cabaret style. It was nice. We had a good time.
Right. Strazza, I thought about you over the weekend. We had a scoop and score in the Ohio State game, and then I immediately thought of you. Right. So
the college games have been pretty solid. But 3 of the 4 NFL games this weekend were trash, or 4 out of 4 to 5 so far.
Right.
Last night was awesome. Jaden Daniels, what a star. What a star. Love watching him play. Clutch for a rookie. Just impressive. Really.
Okay, wait. Before we go, real quick, there was a bunch of headlines this morning about retail. There's a big retail conference happening right now. Jeff Mackey put out a preview of this conference / like earnings season. I didn't realize until I read that report that like this week is kind of like the biggest week of the year in terms of information for retail, for like the retail industry. So I'm going to drop the link in the chat. It's a free report that Jeff put together for us. Click on the link, get the report. That's the first thing. Second thing is programming note. Today at 4:00, right, JC? 4:00, JC is going live with Jeff Hirsch. We will be sending out links to watch. It'll be on YouTube. It'll be on the site. So 4:00, talking about the January trifecta, JC and Jeff Hirsch. And stay tuned for that because I'll send out an email about it, multiple emails about it, and it'll be on the channel. So that's what I got. We got chart requests live at 1:00. Email your requests in, questions at stockmarketmedia.com, and we're done. And so thank you to Todd and Jason and Kenny. What's up?
Emergency Twitter Spaces. Check my Twitter feed.
Whoa! Emergency.
Is that what happens when that's bearish? I don't know what that is.
I don't know.
All right.
You got to tune in to find out.
Smash the like. See you guys.
Adios.
I can't take no loss. I don't even know what it costs.